So how will your taxes change under Donald Trump? Go ahead and comment below and let me know what you think. With Republicans now holding the presidency, the House, and the Senate, Trump is in a very strong position to advance his tax agenda, and if you are not prepared for it, you may miss out on some of the biggest tax breaks available in it. There will be new tax breaks for investors, business owners, homeowners, retirees, overtime workers, hospitality workers, and more, which will affect most Americans. So as a licensed CPA that tax plans every day at mycpacoach.com, and as someone who has been following every new progression in Trump's tax plan, I want to help you understand how your taxes could change, when they could change, and more importantly, how you can take advantage of the many tax breaks that will be available in the near future here. Okay, so one thing we know for sure is that Trump is not a proponent of raising income taxes on American families, American businesses, and American investors. Instead, your taxes are more likely to decrease or stay the same. But people who align themselves very closely with these tax changes may be able to save massive amounts of money in taxes under Trump. So let's talk about it, starting with the extension of tax cuts that he originally introduced during his first term. So in 2017, individual tax breaks were reduced temporarily through the end of 2025. And once they expire, tax rates were scheduled to go back up. For example, the maximum individual tax rates were set to go back up from 37% to 39.6%. But under Trump now, he will make this tax cut permanent, and therefore there will be no increases in federal tax rates for individuals across the board. In addition to that though, the standard deduction, which more than doubled in 2017, was only meant to be a temporary change as well, and is also set to expire at the end of 2025. But Trump will also seek to make this tax cut permanent as well, which again will benefit most Americans. For instance, in 2025, the standard deduction will be $15,000 for single taxpayers and $30,000 for married taxpayers. Now, one thing people did not like about the 2017 tax cuts were caps to the itemized deduction, specifically the SALT cap, which basically limited people's ability to write off their state and local taxes to just $10,000 on their tax return. And because the tax cuts increased the standard deduction, you would need to have more than $15,000 or $30,000 in itemized expenses for the itemized deduction to even be equally as beneficial as the standard deduction. So what happened is that many people with a lot of itemized expenses were unable to benefit from them on their tax return. And the SALT cap of $10,000 made it even more difficult. But fortunately, Trump has promised to remove this cap or just let it expire at the end of 2025, which will make the itemized deduction even more attractive for people with eligible expenses that exceed their standard deduction, of course. But to add to this, Trump is also proposing to add even more eligible expenses to the itemized deduction, like the ability to write off your auto loan interest, for example. Over 100 million Americans have auto loan interest, and being able to use this as an itemized deduction will again make the itemized deduction even more attractive and worth it for people with other itemized expenses as well. So in the event that your auto loan interest, your medical expenses, your mortgage interest, your state and local taxes, and charitable donations exceed the value of your standard deduction, then the itemized deduction will save you more money in taxes when you file your tax return, of course, after all of this goes into effect. So for all individuals, there will be no increases in your tax rates. You will keep the increased standard deduction, and your itemized deduction will be even more lucrative for those who use this option. And this is really just the beginning here. For business owners and investors, you will be able to benefit from even more tax write-offs and deductions on top of this. For example, the QBI Tax Deduction, which grants qualifying business business owners an automatic 20% deduction against their income was set to expire at the end of 2025. But Trump is expected to extend this deduction as well, which will allow millions of small business owners to continue to pay less taxes on top of the individual tax breaks discussed. For example, let's say you have a married small business owner with $100,000 in business income. Well, they would receive a $20,000 QBI tax deduction, leaving them with $80,000 in income. But then they could still take the $30,000 standard deduction as a married taxpayer, leaving them with just $50,000 in taxable income on their tax return, which would leave them in just a 12% tax bracket in 2025. Not bad. And then there is bonus depreciation, which allows investors to write off large portions of their investment property, like real estate, equipment, machinery, vehicles, and even private jets.
And hey, what if I bought a jet? Well, that'd be ridiculous. If I buy this jet, can I write off my entire tax bill? He's like, actually, that would work.
Now, while that is a wild example, many investors have legitimate use cases for bonus depreciation. For example, investors with rental properties can take even larger depreciation deductions due to bonus depreciation. In fact, it was reported that Donald Trump himself reported more than $1 billion in rental losses on his tax returns to offset his taxes, and a large portion of those losses were directly related to depreciation. And that's just a big example, but everyday real estate investors and business owners can benefit from this as well. Like the doctor or dentist that needs to buy expensive equipment for their office, or the truck driver that needs to buy a truck, or the construction worker who needs to buy expensive tools and devices in order to complete a job, and so on. They all can benefit from these bonus depreciation rules, and this is basically how it works. So usually assets that you purchase are expensed over several years, but the 2017 tax cuts allowed up to 100% of investment assets to be expensed in the first year it was purchased and placed in service. But since 2023, the bonus depreciation rates have been phasing out and even decreasing each year. For instance, it was 80% in 2023, 60% in 2024, and it's supposed to be 40% in 2025. However, it is widely assumed that he will increase the bonus depreciation rates back up to 100%, which could save qualifying individuals tens of thousands of dollars in taxes or more depending on the situation. Plus, certain business owners who elect to be taxed as a C Corp may also be able to save even more money in taxes as well. So like I mentioned earlier, the maximum individual tax rate is going to be 37%. But the maximum C Corp tax rate, which is currently 21%, is likely going to decrease again down to 20% and possibly even down to 15% for corporations who produce products in America. So if we just look at the numbers alone here, business owners who are in a 32% individual tax bracket or higher may benefit from switching to a C corporation to reduce their tax bracket by 10% or more if they have plans to reinvest into their business. But there are far more rules and considerations that would go into a decision like that, so be sure to talk to your CPA if that's something that you're interested in. Now, for people who do not own a business, there are still several more tax provisions here that you may benefit from depending on your unique circumstances. For example, Trump intends to make certain types of income exempt from taxation altogether. Specifically, overtime pay would be exempt from taxes, so hourly employees who work more than 40 hours per week would pay no tax on hourly pay beyond this limit. And this would affect professionals across many different industries like nurses, construction workers, engineers, warehouse workers, police officers, firefighters, and so on. In addition to this, hospitality workers who receive tips would be subject to no taxes on those tips under Trump's tax plan. So this would obviously apply to bartenders, servers, and potentially even professions like DoorDash drivers, Uber, Lyft drivers, and so on who receive tip income. Then there are Social Security benefits. Trump intends to make Social Security benefits exempt from taxes as well, which would benefit retirees who receive this form of income. Now, currently, Social Security benefits are exempt from taxation if your income is below a certain level. But once it exceeds a certain threshold, anywhere from 50 to 85% of it could be subject to taxes. For example, up to 50% of your Social Security benefits are taxable to you if your income exceeds $25,000 as a single taxpayer. And once it exceeds $34,000, up to 85% of those benefits are taxable. Now, Trump intends to get rid of these thresholds altogether and make Social Security income exempt from taxes regardless of your income. Now, with that said, another question that people have right now is, well, when will these tax changes actually go in effect? Well, let's look at history. When Trump took office in 2017 and introduced the 2017 Tax Cuts and Jobs Act, many of the tax cuts went into effect in 2018, so a year later. So if these changes follow the same sequence of events, then one may say that these changes may go into effect as early as 2026 in that tax year. This would also coincide with the fact that many of the existing tax cuts do not actually expire until the end of 2025 as well. However, the timing of when these tax cuts actually take effect would ultimately depend on Congress and their ability to introduce these bills and pass them into law. And with the Republican control of the presidency, the House, and the Senate, it is possible that they could move quickly on these tax proposals and introduce them as early as 2025. In any case, I will continue to publish new content as more information comes out. So make sure you subscribe if you want to learn more and stay in the loop on this and the potential tax strategies that will follow these changes. And if you currently pay a lot of money in taxes and want a plan that is guaranteed to reduce it, just apply to work with one of my CPAs today at mycpacoach.com.